Traders, welcome back. Over the course of my day trading career, I have made over $1 million in profit, and every significant trade I take is based on a powerful concept called liquidity sweeps. Today, I'm going to break down how you can identify liquidity sweeps in the market so that you can start making smarter, more profitable trades. Before we dive into how to spot these liquidity sweeps, we must first understand where liquidity lies within the market. This foundational knowledge is critical because without it, most traders fail to grasp why price moves the way it does around certain levels. I want to be honest with you, early in my trading journey, almost every time I entered a trade, I got stopped out, only to then watch price accelerate in the direction I initially anticipated. I lost funded accounts, thousands of dollars, and with it, my confidence. The reason? I simply didn't understand liquidity. My goal today is to save you from the same costly mistakes and help you grasp these essential concepts more quickly so you can overcome the struggles I faced. So, where does liquidity exist within the market? Surprisingly, it's easier to identify than most traders realize. Let's start with basics: highs and lows on price charts. A high consists of a move up followed immediately by a move down. A low is the opposite, a move down followed by an upward movement. These patterns are fundamental and can be observed in as little as 2 candlesticks. Why are highs and lows important? Because they mark where liquidity pools rest. Think about retail traders during an uptrend. When price pushes above a previous high, many will jump in, buying in anticipation of the trend continuing. Conversely, sellers who had short positions near that high will often place their stop losses just above it. The same applies in downtrends. When price breaks below a low, many traders sell, with the opposing buy positions placing stops just below that low. What this creates is clusters of resting orders, buy orders above highs and sell orders below lows that represent pockets of liquidity. Institutional traders and algorithms know this well. They won't just fill orders arbitrarily, they aim to execute trades at the most optimal prices. Rather than filling orders at inferior prices along small moves, they push price beyond these highs or lows to trigger stop losses and fill large blocks of orders in one sweep. This is what we call a liquidity sweep. Why is this important? Because once these resting orders are swept and filled, the market usually reverses direction. This creates a high probability trading opportunity to enter right after these sweeps, catching the start of bigger moves. Many retail traders press buy immediately when price breaches a low or sell right after breaking a high, only to be trapped by these sweeps and suffer losses. To avoid that, you must wait for confirmation that the liquidity has actually been swept and the reversal is underway. Let me share a story from my earlier days trading forex. I used a London session fake-out strategy, where almost every trade triggered a stop out right when London opened, but then price reversed and moved strongly in my expected direction. What I didn't realize back then was that these were liquidity sweeps. Every London open was an institutional level sweep filling orders before moving the market. Now, understanding what liquidity is, resting buy and sell orders clustered above highs and below lows, and why it causes price reversals is only half the battle. A liquidity sweep specifically occurs when these resting orders are hit and filled. Market movers, often large institutions, push price beyond these key levels momentarily to trigger these stop losses, fill their orders efficiently, and then reverse price for the actual trend move. Look at the chart, you'll see price spike briefly above a resistance high or below support low, trigger stops, then reverse sharply. That spike is the liquidity sweep, and the reversal afterward is your entry signal. So, how do you trade liquidity sweeps effectively? The first step is marking liquidity zones on higher time frames. You want to identify significant hourly or 4-hour highs and lows where stops cluster. Around these key areas, watch for price to push beyond and create sharp wicks or spikes. However, don't enter right away. Instead, zoom into lower time frames, such as the 5-minute and 1-minute charts, to look for confirmation signals, break of structure, order blocks, fair value gaps, or divergences. These confirm that liquidity is indeed being swept and the reversal is beginning. An example pattern looks like this. Price breaches a previous high or low abruptly, triggering stops. A strong reversal candle follows, signaling rejection. Confirmation on lower time frames provides precise entries. Targets are set at opposing liquidity zones for optimal risk-reward. This approach can be applied across markets, stocks, indices like the S&P 500 or NASDAQ, forex pairs, and any trading session, whether New York, London, or Asian. One last golden rule: never blindly trade just because price pokes above or below a high or low. Wait for the sweep to complete and for confirmation before committing. This discipline transforms the perceived fake-outs into predictable, high-probability trades aligned with institutional moves. Additionally, always journal your trades, record your entries, reasons, emotions, and outcomes. Understanding patterns in your mistakes is crucial to long-term success. For traders who want to deepen their skills, I offer detailed courses, live coaching, and funded accounts to accelerate your journey. Links are in the description if you're interested. To sum up, liquidity sweeps represent the market's way of absorbing resting orders and creating momentum. Recognizing these sweeps and trading with confirmation gives you a powerful edge in the markets. Use this knowledge, apply it consistently, and watch your trading transform. Thanks for tuning in. I appreciate you all. Trade smart and see you next time.
Welcome to Nomad Money, your go-to community for smart, clear trading strategies. Whether you're just starting or experienced, we provide real-time insights and tools to help you trade smarter, not harder. Join our supportive network, learn from experts, and reduce guesswork with our proven methods. Plus, don't miss out on our free Telegram group where you get exclusive tips and live support. Trade with confidence, trade with Nomad Money.